Lots of music. Welcome, everyone. Good evening to everybody, and good morning, Greg, there in USA. Thank you so much for joining us today.
Good evening, Azeeza. Thank you very much for having me. Excited
indeed.
To be here.
Thank you so much. And this is a really very different time zone. Normally, we conduct these sessions on Thursdays, and we are glad that Greg could make it with us for today on Wednesday, which is part of our business series, Business Synergy Spotlight series, which is really about our special guests showing up with very exclusive conversations. And today's conversation is about business legacy, IPO, and investment, something very close to our heart when it comes to business leaders getting into their next level planning, creating their own success in creating their lives. So I'm so grateful that Greg would join us today, and he is an experienced financial consultant. He's the managing director of Exchange Listing LLC, who is particularly knowledgeable in the realm of public equity. And I've known him for a couple of years right now. I'm so glad that we could meet up in Singapore as you travel to this part of the world many times. And he's notably interested in educating and on initial public offerings, otherwise known as IPO. When it comes to consulting, Greg values the power of relationships, and building and maintaining strong connections is essential for any business relationships and professional relationships to grow, but it's especially imperative for consultants. When Greg is not assisting clients and expanding his investment portfolio, he enjoys spending time with his family, and I just love that he travels with his wife, and we've met each other so many times. So thank you and welcome once again to our Business Synergy Spotlight series in conjunction with our Business Synergy and Growth Movement.
And thank you again, Azeeza, for having me. I'm really excited for this opportunity to talk to you and your relationships and your people, and really get the opportunity to educate people on the process of going public and why they would go public in the United States. So happy to have this opportunity here.
Yes, indeed. And this is such a sensitive moment in the world. At the same time, it is also a moment for us to reflect, get into really strong synergy among the business connections globally. And that's what GoGLOBAL is so excited to be able to bring business leaders like yourself to the platform, to the world, in this part of the world, especially in Asia where you have been traveling. Greg, from your vantage point in global capital markets, what is the biggest shift businesses must understand today when it comes to IPO and investments?
That's a great question, Azeez. I would say that the thing that people need to understand is there's a shift towards fundamentals. I mean, over the last few years, there's been more of a focus on companies that can explode but don't necessarily have the fundamentals. AI, there's still AI and technology, those type of companies that are more maybe in the earlier stages, but don't have the fundamentals, don't have the revenue, profitability, haven't really shown the growth yet. I think with what's going on in the world right now, I think it's more of the focus is going to be on companies that have true fundamentals. They've shown that they have the growth, they have revenue, they have a real plan to get to profitability if they're not profitable. But most important, there's a reason for them to go public. What is it? Is it to raise capital? Is it to just get use their stock for their employees? What is the reason they want to do it? And we'll dive more into that. But I think the focus now is the shift has been less away from companies that are just in really exciting spaces, maybe don't have the fundamentals, to companies that are having true fundamentals. And I think that's not just the marketplace, but that's with the regulators over here in the United States. Both NASDAQ and NYSE, New York Stock Exchange, are more focused on companies that have fundamentals, as you know, have the revenue, have the profits, as opposed to companies that just are in exciting spaces.
Oh my God, this conversation is so important because many a times when we hear people going for IPO, they call it an exit. Absolutely, it is an exit to some extent, but it's initial public offering. For God's sake, you know, so how do they normally see it? Is unfortunately, it's like, can I get an exit and out of the game? And they use that as a reason, and that's where the fundamentals are many a time compromised. And I'm so glad that everybody's stepping up to that clarity. And many founders dream of scaling. You and I know, but few think of it as in terms of legacy, and that's exactly where the fundamental conversation comes in, right? But what does business legacy truly means when we talk about it as an IPO, as in today's environment, especially?
So that's again a good question, Azeeza. I mean, I think you started off by saying something, you know, totally correct, which just is not an exit. I mean, it will be an exit. You might be able to sell some of your stock, but this is much more about growing your business and coming public here in the U.S. or just going public anywhere and raising that capital is about building a legacy. What do you want your company to be? If you don't want your company to grow, if you're happy the way it is, then or you just want to sell your business or exit, then, you know, going public, especially through an IPO, is not necessarily the way for you to go. But if you want that legacy to be of how can I expand the business? How can I really make a change in this world? How can I really take my business and make it worldwide and really grow it? Then that's how you build the legacy. And that's why you go public here, because of the access to the capital, the access to the markets, the access to the U.S. Individuals, retail and institutional. If you're not looking to do that, if you're not looking to build a legacy, if you're really just looking to sell the business, this isn't right for you. But if you are really looking to, hey, how can I grow my business? How can I take my business and expand it to other regions and do acquisitions? Then that's building a legacy, and that's what I think it means.
Yeah, and you know, this thing about all these SMEs, while they look at IPO as an option, and of course there is M&A and so many other ways they can do with their business, is primarily why they have created what they have created. And what I realized, and especially since you travel to this part of the world so much, I mean, like so many times you've come to this part of the world, and I'm sure you've exposed to not only Asian but also international, US and other parts of the world SMEs. What do you feel are the top 3 mistakes businesses make when they are preparing for an IPO? Or even investability, for that matter.
Right. I think the top 3 mistakes is not being prepared for the IPO. I mean, you know, the first thing that I always tell people, and just so everybody, I come from a legal background where I was a lawyer here for 25 years. But the most important thing in terms of preparing is the getting yourself ready for what the audit is going to be. I don't think that a lot of people understand what really goes into getting your financial statements ready. So I think in terms of being prepared, the first thing is making sure that you have good financials so that when it's time for us to get the audit done, you're not, you know, we're not taking years to get this done because you might miss the market. So, you know, the first thing is, you know, getting your financials in some sort of order so that you have something you can present to the auditors here, something you can present to the U.S. markets before we even, you know, start the IPO process. The second is not really thinking about, you know, how much capital they need to raise and what that's going to do for them to get through the IPO process and then expand. You know, how much capital do they really need to grow their business? You know, we always recommend that when you do the IPO, that you raise the least amount possible because that's going to be your worst valuation, hopefully, once the IPO is done. So I think there's a thought process that you should raise too much money. And when you're preparing, they're preparing to raise too much money. And the third one, which I think is an important one, gets to valuation. Obviously, everybody always wants to have the highest valuation possible. But the truth of the matter is, if you go out and you try and overvalue your company too much, the market here is going to dictate that it comes down. And, you know, we'll talk more about it during this time, but getting you public is only a piece of the puzzle. And again, it's very important when people are preparing to understand this. Getting you public is here. What you see is too many of these companies get public. We get them through the process, and then they're not ready to be public companies. They haven't prepared properly. They haven't gotten marketing in place and investor relation in place. And the stock, you know, or they overvalued the company and the stock falls off the cliff. It's honestly why SPACs here don't do as well. So I think it's really being realistic about valuation and understand you give the market a chance to go up instead of going down.
Yeah. And that's exactly what most companies struggle, because even as a fundraising, right, when we do our investability program, most of the time it goes out there where people do not know what's next after getting into a listing, or, you know, how big they're going to grow. Most SMEs don't even have a like direction over what happens after the first raise, right? So that really creates so much of lack of clarity for themselves, and in the same dynamics, it reflects in how they communicate, how they reach out to investors. And this whole thing about investor relationship, I've met so many listed companies in the region where they don't even have a proper relationship building happening, and most importantly, they don't even have a strategy that can keep being in the market, and that's how they just stay stagnated, and they're just like in the game, but they're not really building the business. Do you relate to that?
Yeah, I mean, certainly from, an aftermarket, it's so important that you have the right investor relations, public relations, marketing plan in place, because, people think they just throw out a press release and that's going to be it. Putting news out that people don't see, and all about this, Azeeza, in terms of marketing properly and getting people aware of what's going on is so important. So whether it's non-deal roadshows, whether it's analyst coverage, research coverage, working with the right banker, working with the right marketing people, but really getting the news out so people can see it. Because like I said, the last thing you want to have happen is you get your IPO done, you raise your capital, your company's doing well, but the stock goes down because, the market isn't aware of what's going on with your company. So that is something we really focus on even before the IPO is done, which is getting the company ready from a marketing standpoint so that we don't get to this point and the stock falls off.
Yeah.
By the way, that applies to everybody. That's not just with Asian companies. We certainly had some of those issues with Asian companies, but that's domestic companies, European companies. Everybody's got to be ready to go public.
Yeah. And I still remember when you talk about all the various partners needed to execute this. When I met you in Singapore, the very first meeting, you actually came, like the whole group of you. It was like, this is the person that was with this legal, this compliance, all of them together. So you actually have a one-stop kind of a network that is so trusted that you work together with, and that's really amazing.
Yeah, having a good team in place, for everything, like you said, the accountant, the auditor, the transfer agent, the attorney, the investor relations, the banker, obviously. We work with people over here all the time, so having those relationships is just so important to getting the process done. If we don't have good professionals in place, a good team in place, then it's not going to be successful. So that is a huge key.
And that's really a struggle because sometimes people start looking for them in bits and pieces, like, where's my lawyer? Where's my, it's right. Like shouting out all these. And that's where most people struggle with, especially when it comes to small businesses or businesses that is getting ready to like really think about IPO. At what stage do you feel businesses should be like really looking at themselves seriously, start thinking about IPO?
I mean, it really depends on the company, as we're talking, and the marketplace, as we're talking about. I think fundamentals is really important right now. So I think that if you're a couple of years in and you've shown a growth in your revenue, there's no in the US, there's no revenue requirement. So it's not like, if you have 8 million of revenue, you're not big enough, or 12 million of revenue, not big enough. But if obviously if you're going down in revenue, it's a tough time to go to the market. If you're incredibly not losing money, not profitable, it's a tough time to go to the market. But if you've gone from and I'm generally using US dollars, but the idea is the same. You've gone from 2 million to 5 million to 7 to $12 million in revenue over the last couple of years, and you're starting to show profitability or close to profitability, and you can show the marketplace here that with the capital you're going to get here, you're going to have incredible growth. They're really about the fundamentals and the growth. So I think they should seriously start thinking about it once they're in the period where they're in that real growth stage, and they have something to show the market here. Hey, look, we're going to raise $20 million, and as part of that capital raise, our revenue is going to go from $10 million to $25 million, and we're going to become profitable. That's when they should seriously start thinking about it. If they're in the early stage and they need capital just to kick off, it's going to be really in this market. Now, maybe a couple of years ago, the market was different. So, but in this current market, I think you really have to be in that stage of having revenue and being able to show growth. And if you're not profitable yet, at least heading toward profitability.
Yeah, and that's exactly what has been happening. And the last conversation we had on the phone, you talked about how everything is getting serious, and you just mentioned about it at the early part of the conversation, where the organized like the Nasdaq and NYC, they are looking at really fundamentals being strong. And most of the businesses, when they are growing, they are not looking at, like you say, when they want money, they forget to kind of get out there and make themselves visible. They're like, okay, they'll wait, and then they hopefully start making revenue, and then they start making noise. And I feel like there's a lag there, because they should actually start doing some basic outreach in terms of visibility, that they are there in the market. What are your thoughts on that?
No, I mean, I think it's the same thing in terms of raising capital or going public, which is, you need to get ahead of it. You don't want to start today if you need capital tomorrow. So, the sooner that you start getting the marketing out there, getting it out there, the better. Like I said, prepping the market for it. And when I say the market, I just mean in general, whatever investors you're going to be going to, if you're doing a private round before you go public, if you're going public, but preparing for it ahead of time and getting the market ready and getting yourself ready. And we talk to people about it all the time. If we're going to start an IPO process, the IPO process is going to take a minimum of, depending on how long financial statements take, 6 to 9 to 12 months. So if you start today, you're 6 to 9 to 12 months out. So and that's if everything goes well. So we tell people the sooner, once you've made that decision, hey, we're going to go public, let's start it, because getting those financials ready, starting to prep the market, like you said, the sooner we can start that process, the better.
Yeah, and that's exactly sometimes people miss out in that dynamics. And then there are some key indicators that a company is truly ready. How would you see that? What are the key indicators beyond revenue?
I think a lot of it is profitability. I think that profitability and growth I'd say more important. If you're sitting here with $100 million in revenue, but you're losing $20 million a year, and that's happening year over year, and you can't really show how you're going to get out of that. That's tough. But if you can show how you're profitable, how you're going to become profitable, how you're going to grow the business, especially with the capital, that's just as important with revenue. Obviously, if you're in an exciting space, if you're in the drone space, if you're in some sort of hot technology space, AI space, and you could show contracts, if you could show something outside of, like you said, maybe you don't have revenue yet, or you have nominal revenue yet, but something to show what the revenue is going to ramp up. I'm working with an EV company right now that has incredible contracts. They have revenue, but they have incredible contracts. And those contracts are with really, incredible partners also. I think that's a company that's IPO ready, and the market's going to really like it, because they're going to know that once they have access to capital, they can turn on the contracts, and the revenue, the profits, and growth is really going to go on from there.
Yeah, and that is an exciting dynamics to be working from as well. And what do investors will really look for today's, right now as we speak into it, there's so much of chaos in the world. What do you feel the real investor sentiment is right now, especially talking about equity, and what are they really looking for in today's context?
Well, I mean, I think that it's like I said, and that changes daily, but it's a bit of a loaded question. But first of all, investors are investors, meaning they need to find deals to invest in. So it's not like there's a slowdown in terms of, hey, investors aren't going to invest in deals. They're going to invest. The question is where and how do you get them interested in your company? Right now, a lot of the investors are more focused on companies that are already public, because there's less risk to that. And so how do you shift the focus to getting them involved in a company that's doing an IPO and therefore might need to do a little more risk? And from there, again, I really just think it's focusing on really good technologies with good growth. I think right now the investors, all the bankers I talk to, all the investors I talk to, the focus is on really looking for companies that, as we turn, the next couple of years and things change in the market and the world, like you said, there's craziness in the world right now, but companies that are going to survive this and really show something that's going to be good for the world and is going to have good growth and be profitable. I keep coming back to that. But at the end of the day, what investors really want is sustainability. They don't want a company that's going to be here for 6 months, stock's going to take off, then drop right back down. So are they going to be able to sustain their business? So with good revenue, with good growth, you're going to have sustainability, and they can then look at it as long-term investors instead of short-term investors, which is really important in this market.
And past records definitely matter, but I love it that you say the importance of the future. We call it brightness of the future, being available with all these various contexts to it. One of the things that I realized among SMEs, especially if they are not from the technology business, and they have been kind of ignoring that, it's high time they look at it, right? Because whatever industry they are in, they should be evolving into a technology element around it. Do you have any stories? I mean, like success stories on that area?
It's very true. I mean, I'm working with two companies right now that are more bricks and mortars company, a nursing home company, a fabrication company. And we're doing IPOs for them, and they have good revenue. They have some of the good growth we're talking about, but they've added some technology to it. You know what I'm saying? So that they have the nursing home has a really cool intellectual property technology to expand. They're doing acquisitions from it, fabrication, same thing again. So you're talking bricks and mortars companies that ordinarily wouldn't be sexy. They have good fundamentals, but not sexy. But they've added a technology component. They've created something that nobody else has to basically show how they can grow their business outside of the bricks and mortars. And that to me is phenomenal in this marketplace, because then you have the strong fundamentals along with a great technology play. So I think that's very important to have both, which is the fundamentals along with the showing the technology. And a lot of SMEs have that. A lot of small businesses have that. They have cool technology, but a lot of them probably have the technology without the fundamentals, and that's hard right now. If you had to choose between the two, fundamentals in today's market, I think is a little more important. But if you can have the fundamentals with the technology, show the growth in there, that's amazing.
And that's exactly why we are, encouraging our SMEs. As you know, we are very much focused in the travel, tourism, hospitality space, and many of these FNBs really are struggling to innovate on technology. I think this is a shout out to technology companies to connect with us so we can see how your specialty can plug into the brick and mortar companies, and that can create a lot of value for both companies as well, right?
Yes, correct.
And just wanted to check in on the dynamics of global investors, like to attract global investors. How much you have seen a lot of Asian companies. To what level do you see they are prepared, and what do you think is lagging, or what can they improve on to attract global investors?
Well, it depends what you mean by global investors. Obviously, for Asian companies, global investors is different than U.S. companies. And I think the problem actually is that the Asian companies are attracting only Asian investors, and we need to figure out a way of getting into U.S. investors. So even when they come public here, a lot of the interest is coming from their own investors. So I think we need to. So yes, obviously we want to capitalize on the huge Asian market to make sure that they're buying in the IPO and then supporting the company in aftermarket basis, but also making sure that the company is doing enough in the U.S., whether it's bringing their operations here, whether it's doing the investor relations here, but bringing in U.S. support. U.S. So in that case, it's global. Both. Let's have the Asian support and the U.S. support, because I think a reason a lot of these Asian companies are not the IPOs are getting done. That's not the problem. But in the aftermarket, they're not doing as well, is because they're not doing enough. They're not coming to enough conferences here, doing not enough non-deal roadshows here, working with the right bankers here to get real support here in the U.S.
Yeah, that's such a valid point, and the visibility is always limited for the US people to even know that they exist, right?
Correct. That's correct. Yeah. I mean, if like you said, if they're just marketing it to people over in Asia, or marketing to people here, they have to do it globally. I mean, they have to be doing both things, which is hitting up the Asian market while coming to the US and hitting up the US market also. It's why, being a CEO of a public company is a full-time job. You know what I'm saying? You have to understand the fact that you have to have somebody handling the capital market side while you're handling somebody's handling the business.
Yes, and I think most of the time this is not handled properly, because the CEO tend to do everything, and especially when they are starting to think about IPO, they still struggle with the business development as well as like what you said, the investor relationship person, or the outreach is not always there. And is that really a challenge for most companies? Because those that we have met and we are working with, the investor relationship is always empty.
It's a huge challenge, whether between the cost of doing it, both from a time and a money standpoint. People think that, we're public, the work is done, we'll put out a press release and it'll be fine. But a huge challenge is making sure that and it's something we try and talk to them about, and teach them about, which is, if you're not willing to put that in, honestly, don't go public, because, then the value of your stock's going to go down. Your shareholders aren't going to be happy. And, maybe you raise some capital, but, what were you really doing this for? We talk about legacy. What's your legacy if you can't, build this thing out long term? So you have to be willing to devote the resources, both time and money, in the investor relations and marketing on an after IPO basis.
So this is a really clear dynamics for our audience, because they need to know when we are getting into the equity market, IPO or fundraising, they need to have two tracks. One is building the equity sales or the share sales. They need to have a clear business development direction for that, while they do a complete business development direction for their products and services.
It's two different businesses, basically. And we tell people you're ready for it. You got your business side, and you have your marketing and your public side. And like I said, you have to have people involved and be willing to put the resource there to understand the fact that whoever was CEO of the company before or chairman of the company before, they could still run the operations, but maybe they can't handle the cap market side, or they're handling the cap market side. They need somebody else to handle the operations, because now you basically have two separate businesses. You should have capital to support that, but you really have two separate businesses. And if you let one go, it's going to affect the other. So, I mean, it's really, because at the end of the day, if you're great at the capital market side, but your business suffers because you're not focusing on your business, eventually it's going to be a problem too. So you got to have good people on both ends, and you got to be willing to use your resources, both financially and time-wise, and be willing to come here to the U.S. as needed, or have people in the U.S. that can handle that for you.
Okay, that's an amazing offer. Thank you for that. So then what would you give as an advice to businesses aiming to expand from public to global market through IPO? Because this is a conversation we've had with many companies that may use IPO as a strategy to get into internationalization, especially in countries that may have limited resources, or they are not able to attract local funds.
No, I think it's just a lot of what we've talked about, which is be prepared, make sure that they really want to go public here. Obviously, if there's a reason besides just accessing the U.S. markets, meaning if they plan on expanding their business to the U.S. or to other markets, that'd be a huge reason to do an IPO here. It's not required, but it's if they're looking to expand their business, whatever industry they're in, and come to the U.S., then that's a huge selling point here. But I think most important is just getting ready and knowing what the money is going to be for and why they're doing it. Because again, they have to understand that getting the IPO done and being successful post IPO are two different things. So make sure that whatever business they're in is going to be something that's going to be successful, and the market's going to really want it here, not just in the IPO, but the aftermarket.
Yeah. And, in today's economic climate, what risk do you see businesses that are getting in? What do they need to be most mindful about when seeking funds?
Obviously, you first of all have valuation. So you want to make sure you're getting the proper valuation. One of the many reasons people go public here in the U.S. Is because you're going to get a better valuation than raising capital. But so you're talking about from a company standpoint or an investor standpoint. From a company standpoint, you're now a public company. Everything, as we say, the kimono is open. I mean, it's going to be, if people want to check your financials out, they can check your financials out. People are going to see how much you're getting paid. Everything is going to be disclosed. It's almost impossible to keep any business secrets because it's got to be disclosed. So you have to understand that you're going to be public. You're going to have to keep doing filings. There's obviously a cost to it. You're going to have to put, the time in, like we've talked about, in terms of doing marketing and everything over here. So the risks are capital, the risks are time, the risks are taking away from your business. Obviously, there's a lot of pros to it in terms of being able to expand the business and everything we've talked about. But there are risks here, that your stock won't do well. There are risks here that your company won't do well. But I think it really comes down to can you get the right valuation for raising the capital? Because the truth of the matter is raising private money is really hard these days. So it's sometimes not a matter of private versus public; it's public versus nothing, or money versus the private route. If in all honesty, if you can get a good money on good terms privately, maybe you stay that direction. But the reality is, especially here in the U.S., it's really hard to access the private money in a way that's not going to give away 90% of your company and allow you to grow.
Yeah, when you talk about the transparency, I just love it. When we have conversations with businesses that's private and then businesses that listed. I mean, one of these listed company owner I spoke to, I mean, like I had to ask the same questions. The way that a listed company owner answers is like, take it, everything. It's the board. Just go ahead. It's like almost and that's the power of it, especially when we work with countries and we're looking at taking them going global or raising funds. We always want them to have some level of stability through a IPO. In that way, we all know they are more accountable. And especially in developing countries, it becomes a easier way of working with them. And versus a private company, they'll be like, oh, why do you want to know that? They become defensive and a bit, sticky about it. So what do you feel really happens to the mindset of a business owner, and what do they need to be available for when they go into the public market or even equity market for that matter?
They need to be available to put the time and resources into marketing and building their business. Again, it's two-pronged approach. If your business doesn't do well, I don't care how much marketing you do, it's not going to matter. And if your business does well, but you don't tell the story right, or don't tell the story at all, then it's not going to matter here either. So I think that they have to understand the fact that they got to be able to work on this as two different companies, building the business and building the public market side of it. So the mind shift really has to go from what they were doing before, which is focusing on the one part of it, which is growing the business. Hopefully now with the capital they've gotten, with the public stock that they have, they're able to do that, whether it's organically through M&A. But then they also have to focus on the other side of it, which is running the capital markets, the public side of it.
Yeah, and what do you feel the audiences today, the business leaders who are watching the recording or right now they're watching it, what are the first 3 steps you feel they should take if they are moving towards IPO or even what we call investability and taking into serious business investment readiness?
I think, one of the things that we talked about was the financials. Like I always tell people, once you've made that decision that you're going to go public, whether it's now, 6 months from now, 9, 12 months, start getting your financials ready. Start getting your deck, your financial model in order. But most important is work on the financials, because it always takes longer. Everybody always says, oh, we can have our audit done in 60 to 90 days. And auditing any company, particularly an Asian company, but any company, is much harder than it seems. So once you've made that decision of, hey, we're committed, we want to go public, start working on your financials. Start getting your data room in order. Start getting your deck in order. And this is all stuff that we help with, but deck in order. Start getting your financial model in order, because we're going to be able to go to the bankers who are going to raise the capital. And the more organized you are, the better you look, the better banker you'll have, the more capital you'll raise, or the better valuation. But from a timing standpoint, financials. From a marketing standpoint, it's about getting everything else in order. We put together what we call IPO readiness, which is, steps to get the company ready before they even do their IPO. And that could take as long as you want. It could take 6 months before. It could take 60 days before. And part of that depends on how organized the company already is.
And I think one of the things that I have experienced for listed companies in Singapore, some of the older ones, they went into listing because it was no choice. They didn't design for it. They were like, if I don't go listing, and they literally someone, one of the listed company owner, he went on stage and he said, if I didn't go for public, I would have become a bankrupt. It was those days, right? We're talking about 20 years ago, kind of a listing. And many times listing has happened in Asia. And he's not the only one. I've seen a couple of them who say the same thing. How true is this?
Yeah, I mean, I think it's very true. I mean, I think it's something you really need to focus on, that having, a message is very important. So I think you need to be clear on what your message is, what your growth is, and be able to tell the story.
Yeah. And if they are going to be ready, they should design it in terms of just fluking it, right? It's like, oh my God, I'm in deep trouble. I need to put some story together and go myself out into the public. And I think a lot of companies go that route, not by design, it's by choice. And then that's where they struggle later on, because they don't have a proper follow-up plan, and the share prices drop and all of that. And right now we are talking about impact and legacy. You know, Go Global is a lot about conscious capitalism. I want to ask you, and many times people kind of confuse, we call ourselves impact investing community, but we are really about conscious capitalism. That means doing exponential growth with exponential impact. So that really means going IPO or public into the share market is the way, right? It's not like the like little bit stuff. It's like the big stuff. And we're talking about people like Tata's and Temasek Holdings. These are big guys who really made massive impact. And I want to ask you, right, how much is this valued like in today's investment space, especially when it comes to SMEs who are making big impact and they are able to scale big with all the technology, everything in place? How do you see the value of this kind of growth in today's world or the future to come?
I think it's huge. I think be able to, do things that are conscious, impact driven is huge. I think that it's one of the things the marketplace looks for is, where are we going in the world these days and what's going to be better for the world, whether it's the economy, whether it's environment, et cetera. So I think if we can have a lot of what we've been talking about, which is fundamentals and growth, at the same time as we have something that's conscious and impact driven, I think that's amazing. I think that just sort of puts all the pieces of the puzzle together. You can have that and not have the fundamentals, and it might be able to work. But if you put that together with fundamentals, it's great. But if you're talking about companies that are really in the environment that you're talking about, that you guys work with, Azeeza, I think that's what any investor wants to see these days. Because if they can make money and help the world at the same time, that's check, check, check. So I think that's amazing.
At the end of the day, I still remember, and this was long ago when I first visited Silicon Valley, I was having this whole investment meetup. And one of the consultants back then, I'm talking about 2016, if I'm not wrong, 15, 16, the guy I met at that time, at that time, they said, we want to work with businesses. Nowadays, investors are looking for how they can invest in businesses that is doing good. And it's a fact. And now I think the world is even more, we're talking about 10 years ago. And right now people are even more evolved in that sense.
Oh, definitely. Definitely. I think more so people realize what's going on with the world and the environment and the country, their country they live in, and realize how important these social, impacts are. And so I think it's even more so than ever has been.
Absolutely. And I just love that, today's conversation about legacy, impact. What would be your one message that you would like to share with the global entrepreneurs who are building a lasting business legacy? What would be that one message for them?
I think that the opportunity is here. I think that, like you said, the world is a little bit in chaos, but the U.S. markets are still honestly the best. And there's still a lot of opportunity here. So if you have a good, strong company with good fundamentals, and especially if you're in a good social space, I think you should consider it. I don't think it's for everybody. Sorry about that. I don't think it's for everybody. I don't think it's for every. And I think that what's gone on in the U.S. markets over the last couple of years has sort of taken away the companies that probably shouldn't have been going public. And the focus now is on better companies. I think you're going to see maybe fewer deals, but better deals. But if you are a strong fundamental company and have a real need for the capital and can show what the capital is going to be for, the markets are completely open over here.
Great. I just love that. And I want to, there's audience questions there, but they're asking, what are the industries currently most attractive for IPO, especially, let's say, in the next 3 to 5 years?
I mean, so as much as I've talked about fundamentals, if it's a good life sciences company, a good biotech company that can show, how they're going to get to stage 2, stage 3, I think there's always a need for good life sciences companies. Obviously, drones, technology, AI, again, not just an AI company that is, hey, we're going to have revenue 10 years from now, or a drone company. But if you're in a strong technology space right now, I think that really goes with the fundamentals that we've talked about. But I think anything in the technology space right now is going to do well in this marketplace.
I feel and shouting out to, like just now what you said, hardcore businesses that involves technology will really bring in a lot more value. In that sense, they can cater to so many industries and evolve with so many different ways as well. With our business synergy and growth movement started early this year. And we are about bringing businesses together, educating them on globalization, on the equity market, or rather becoming investable and bankable, doing good. That's what exactly we're talking about. And what do you, I mean, I would love you to come to Sabah in June. I know you travel to this part of the world quite often. I would love to have you join us in June. We will discuss that in a separate call. And also in December, we'll be having another session. So how do you see the power of all these businesses coming together? And what would be your message for companies that kind of come together for education, community creation, and a support network for the SMEs?
So first of all, yes, I do intend to try and get back out there at least once this year, maybe twice. I am looking at June, July right now, but if it works in June, around your event, and love to be out there. I think the message to people is that the U.S. markets are open for good companies, and maybe it's combining a few companies and similar businesses to put something together. But for your partners, I think it's important for them to understand there are plenty of opportunities here for the right companies. And I think that everything that's gone on over the last couple of years has actually gotten us to a better point in the marketplace, because now we have better investors, better bankers that are going to be focused on these deals. Maybe we'll be raising more capital at better valuation as the market continues to adapt. But I think that everybody should understand that, yeah, it's craziness in the world right now, but the U.S. markets are the U.S. markets, and there's still plenty of opportunity here.
And I think the crazier it gets, the stock market has its advantage for everyone too, right?
Yes, absolutely.
Great. So thank you so much. For those of you tuning in, I'm sure you know that you can click on the QR code and join us on the free access to the activities that we're doing in Go Global in the Business Synergy movement. And just as Gregg said, we will be joining in with many of you in Sabah, as that's a live event, and you can connect with us for that. And of course, to get in touch with Gregg, we would love to have you connect with us, and we will be setting up any calls that's needed for you to have a discovery. We call that as a non-obligatory consulting call. If you kind of feel you feel that you want to have a conversation on your journey for the IPO as well. All right. So with that, thank you so much, Gregg, for joining us, and really appreciate your time.
Thank you for hosting the event. Thanks, Azeeza.
Yes. And thank you, everyone, for tuning in. We'll catch up soon in our next session. Bye.